Well, yes, the Reserve Bank of India might put out the guidelines for the one-time restructuring for banks today, and this comes after the September 6th deadline that was put forth to the K.V Kamath Committee to set up give their recommendations to the Reserve Bank of India. Now remember, the K.V Kamath Committee is a 5-member committee that was set up by the RBI, and they were supposed to do work on what should be the next step after the loan moratorium deadline ends on the 31st of August. The K.V Kamath Committee was comprised of course, veteran banker K.V Kamath himself, former State Bank of India Executive Divakar Gupta, former Canara Bank Chairman T.N. Manoharan, consultant Ashwin Parekh, and Indian Banks Association CEO Sunil Mehta. Now, we also picked up from sources that the K.V Kamath Committee will be looking at around 6 sectors on which they will be specifically giving their recommendations. Now, these 6 sectors are the ones which have been impacted because of the COVID-19 induced lockdown, and they may include steel, auto and real estate. We also had a few more details on the real estate sector and the recommendations put forth. It is possible that the committee might recommend the RBI to differentiate between the real estate projects and real estate companies, because some of the companies might already have issues before COVID-19 as well, that there are a few real estate projects that were halted specifically because of the lockdown and the work that got stopped. So giving loans and restructuring loans for these projects might give an impetus to the real estate sector, might bring in some bookings if the work begins quickly and there is financing. Apart from that, it is possible that sectors which may take longer than 2 years to revive according to the committee might have been left out of the recommendations. And also sectors like power, etc. with legacy issues which have had issues even before COVID-19 will be left out by the K.V Kamath Committee in their recommendations. The committee in fact took consultations with various sectors including power, real estate, all industry associations, etc. And very importantly, they worked with around 12 banks is what we are understanding from sources. Now these 12 banks specifically make up around 60 to 65% of exposure to COVID-related accounts and the accounts which have had an impact because of the lockdown. The committee had also sought recommendations from credit rating agencies like ICRA, CARE and CRISIL over the past 2 weeks. They made presentations on 26 sectors to the committee, and very importantly, these sectors were listed down by the Indian Banks Association. And the credit rating agencies are the ones which told the K.V Kamath Committee as to what is the health of each sector, which sector needs help going forward, and which have been majorly impacted under the COVID-19 induced lockdown. A total of 29 sectors were assessed before submitting recommendations, and the recommendations were taken after 20 representations from across industries. Now, remember, the RBI had already laid down some entry barriers, like the account must be standard on 1st of March or not overdue by more than 30 days. And SMA1, SMA2 NPA accounts will not be eligible. But if the account is standard, you can do one-time restructuring without changing the current situation of the account. And also the resolution plan has to be invoked by December 31st, and complete recast has to be done in 180 days for corporate loans and 90 days for personal loans. So all eyes will be on what are the final guidelines that the RBI puts out.